Hi, in this video, I will show you how to create comparable company trading analysis or comps analysis in Excel using FactSet. What we'll be using is a template. You can find it on Canvas, and then we will be coding formulas from FactSet. So the ultimate goal is to build a tool or a comp set that could be easily updated. So most of it will be driven by formulas. So if you were to come back to it, weeks or months later, you could update, refresh the FactSet links, and you could have most recent information. Also, I will start with column B, where I have tickers. And I'll be working first with HD, which stands for Home Depot. But then because I will build it as formulas, I will drag the formulas, and you could change tickers and come up with another comp set. So it's a very versatile tool. So again, you could change tickers, come up with your own set of comps. You could refresh it later. And this is the type of analysis that a lot of junior investment bankers do. For them, a lot of this work is done. So they start with more developed template, but I will show you how to set it up from scratch so that you can customize it, how it works. But again, very useful and practical experience. So let's get started. I will open up my FactSet sidebar. That's a very important tool for today. My first column is company name. So I'll start with the ticker, and I simply would like to find a company name. So for that, I will start by searching company in data item. And by the way, let me also update the identifier. So here, I will click on lookup. Sorry, not lookup, but this select cell reference. I would like to have it as a cell reference. And it populated B8 where my ticker is. So click OK there. So that's good. And now Home Depot showed up as identifier, the company we'd like to look for. And again, I will do all the formulas for Home Depot, and then we'll just drag them for the other companies. So we'll only do it for one company. So for company name, in this list, we have a field called company name, and the formula, FactSet formula, is FG underscore company underscore name. So that's the one I'll be using. And you'll need to pay attention to the exact formulas, because sometimes they're similar things, but you need to be very precise here. So what I did in my comps, I actually put a cursor under company name HD. So I kind of moved to the right so that my output is to the right of the ticker. And you can see this green shaded cell. So it's kind of pre-populated. It shows what it will look like. Home Depot Inc. works for me. I don't think there's anything else that we need to populate for company name. So I'll click insert. And company name populated. Now it moved to the right by itself, and the column that that is next is share price. So for that one, identifier stays there. And then you could look for price, but particular, let me try looking for price. Let me see if you find it. So we've got different types of prices here. I think the one that works is just this, pretty simple one. Let me see the one I'd like. Let me pick this FG price. And then the options are latest completed period, currency local, adjustments. I'll keep all that as it is and press insert. For number of shares, there is some options here. So let me look for shares under data item. There's a field, for example, common shares outstanding. What I really need is fully diluted shares outstanding. I'll talk more about it, but it's the metric that the valuation should be based on. It includes any derivative instruments, things like employee stock options. So fully diluted share count assumes that these derivative instruments that are in the money, that are exercised, and that's, so we would like to run share count and then ultimately the enterprise value based on fully diluted share count. But it doesn't really pop up here. There is one here called common shares used to calculate EPS fully diluted. That's not the one I'm looking for. That is the average for quarter. I need the latest share count, not average, because EPS is average. It's for a quarter, not as of a specific date. So let me try this formula basically. So I'll type FCS underscore shares. And what showed up here is FactSet equity capital structure, basic diluted shares, and market cap. I'll click on that. And then under item, I will select total shares. So which is the sum of basic and fully diluted. And then everything else looks fine to me. So the value that I'm getting is, I think it's billion, because these numbers are in millions. So it's 1,083,000,000 shares for Home Depot. I'll press insert. That's my number of shares. Market cap is simply share price times number of shares. You could pull up market cap directly from FactSet. I wanted to split it a little bit because I want you to have visibility into how market cap is calculated and also enterprise value. You could get enterprise value directly from CapIQ, but quite often you want to show how it's been calculated. So we'll need two components for enterprise value. This is column G here. ENT stands for enterprise. We need cash and debt. Okay, so for cash, what I need to do is go to search for cash and then select cash and short-term investments. And there, under report basis, you need to select quarterly, not annual. If you are in, let's say, situation where a company reported quarter one, quarter two, you don't want to go back to the last available annual balance. You'd like to use the latest quarterly information available to you. So that's why you select quarterly. And then press insert, and you'll get the cash balance. And then let's search for debt. So here we'll select total debt. And it's also quarterly, latest completed. So I'll press insert that. From here, I can calculate the enterprise value, which is market cap plus debt minus cash. So I have 425 billion for Home Depot. You'll be getting slightly different numbers. The share prices are updated daily. But that's normal. If you're doing it in 2021, you should be getting kind of similar numbers, but with time, your numbers will deviate more and more. Let's do the revenue estimates. So here's two types of pools we'll need to do. We'll need to differentiate between actual and forward-looking information. In my template, I've got letter A next to 2019 and 2020. I'm in October 2021. So 2019 and 2020 are actual for me, but 21 and 22 are projections. I have this kind of interesting feature here where when you open up this template, a day populates for today, and then it's used in the year, and then the year fits into the headings. So if your date is later, so let's say it's 10/21/2022, then your headings change. But again, we're not going to go there. For now, it's just what you see on the screen. But again, there's distinction that 2019 and 2020 are actual, and 21 and 22 are forecasted. So for actual, let's start with just simply searching for, well, I'll call it sales. That'll give us the revenue. So FactSet calls it sales, but it's the same as revenue. So click on sales. And the default option here for start date is latest completed period, which would be 2020 for me. I'd like to pull data for 2019. So I will say 1 year ago. And that pulls 110 billion. I'll click insert. And then for 2020 revenue, we'll repeat this process, but instead of start date 1 year ago, I will select latest available. That gives me 132 billion. Now for estimates, we need to look for research estimates. So we need to go to this consensus estimate. It's a tab, it's got a lot of options here. And it actually, for item, selected sales because I was on sales. And then For the year, I will leave current unreported year one. So it gives me 145,000 projection from research analyst for 2021. I'll keep that. And for the next year, I'll go to consensus estimate. And select for the year, following year, FY2. That number is 147 billion. So we populated revenue estimates and actuals. From here, we'll just do it 3 more times for gross profit, EBITDA, and net income. But the process will be very similar. So under data item, I will search for gross. Let me see what it calls it. It's a gross profit. Maybe it's gross margin. Gross income margin. Well, so this is actually percentage. So let me try income, gross income. Let me see what we have under consensus. So under consensus, we do have gross income. So for year 2, I will insert it. It just has to be in 2022. Okay, here's gross income. It was just at the bottom for the actual. So I can populate that too. So I need to start with 1 year ago. I'll press insert. So it gives me 35,583 because I kind of shifted the cell. My formatting has changed a little bit. So I'll copy a format from the previous cell. But let me just finish it up. So I will go to gross income for 2020. I will select under start date, latest available. And then for 2021, I will go to consensus estimate. And then under year, I will select current unreported year, which is 49,291,000,000. So we're done with gross profit. We have 2 more to go. Let's try EBITDA. We'll start with EBITDA tab for actuals. For start date, I will select 1 year ago. So 18,139. And then same thing, EBITDA tab, just instead of start date, it's latest available. Gives me 2797. And then I'll go to consensus estimates. For 2021, we will need to have current year. Okay, we've got that, 2024, 298, insert. And then one more time, for the year, I will select FY2. Okay, so the last one, net income. I've picked the first one I had on my list, net income. Start date should be 1 year ago. If I want 2019. And then for 2020, I will select latest available, insert. For some reason, my formatting is a little off here. I'll copy format from prior cell. Then 2021, we'll go to consensus estimate. Year would be current unreported year, 15,448. And then the last one, consensus estimates. Okay, did the same thing. You can sense from here that it can be fairly repetitive exercise. And I'll tell you, when you do it many, many times in real life, it becomes a little tedious, but you get really good at it by doing it many, many times. But that's what it is. Like you just, we pull a lot of data. I'll tell you one thing, we are actually saving a lot of time by setting it up in FactSet, because when I did it in my job, kind of old-fashioned way, you manually repeated this every single time. But what you'll see, like we do it for one company, and then we, just copy formula for the rest of the company. So we save a lot of repetition and manual work. Okay, so let's calculate multiples now. I don't think I need FactSet here. So EV to revenue multiple. It's actually a fun part, and it's fairly straightforward. So I'll start with enterprise value column G. And I will freeze column G. So I'll put a $sign in front of G8 so that I can copy it across columns. So I'll divide G8 by EBITDA the revenue. And here you'll see I skipped 2019 because that multiple isn't really relevant. I've pulled it more for growth rate and analytical purposes, but I don't need a multiple of 2019 revenue. So I've got 3.2 multiple, and this cell has been pre-formatted in the template. If you do it from scratch, you'll need to set up the formatting that you like. Because it froze EV, I can just copy to the right, and I'm getting 2.9 for 2021 and 2.9 again for 2022 revenue multiple. I've skipped a year here, so I'll have to redo my formula. I'll have to go to enterprise value, freeze the column, and divide it by 2020 EBITDA. So I've got 20.5, 17.5, and 17.1 EBITDA multiples, which are fairly high multiples. And then for price to earnings, I'm not going to use enterprise value. I will use market cap. Freeze column F and divide it by net income for 2020. So I'm getting 30.1 times, 25.1 times, and 24.8 times for 2022. Let's calculate annual revenue growth rates. And that's when I need 2019. So I will divide 2020 revenue by 2019 revenue minus 1. That gives me 20% growth rate, pretty high for traditional company like Home Depot, and 15% in 2021. They've been beneficiaries of kind of home improvement boom caused by COVID. And because their growth rates are high, their multiples are also high. So you'll kind of see that relationship. For CAGR, which stands for compounded annual growth rate, so we'll calculate average growth rate from 2019 to 2022. So the formula is 2022 revenue divided by 2019 revenue. So the growth happens over 3 years. So I will put it in brackets and take it to the power 1/3, and 3 is 3 years, minus 1. So the compounded annual growth rate is 10%. So over 3 years, Home Depot is expected to grow at 10%. Let's calculate gross margins, which would be gross profit divided by revenue. You can calculate EBITDA margins and profit margins. This is just one example. So you've got about 32% gross margin. Let me do one final pull from Capital IQ, short description. Like if you're changing tickers and want to look at companies you're not familiar with, you'd like to understand what they do. And there's different types of descriptions in FactSet. I wanted to show you a really short one that you can put in your comps without kind of manually doing a lot of work. So I'll type description, enter, and it's got equity business description, which is fairly long. If I put it in, let me see. Yeah, you see how it kind of just stretches for many columns. So let me scroll down here. Yeah, I want this one actually, third one on my list. Business description abbreviated in one cell. And then if I press insert, it gives me just a few words about this company. And it's a good check to have, just to make sure you're looking at the company that you really want. All right, well, so we've populated one company. And from here, what I'll do, I'll press Control-C, Control-V. And I've copied my numbers down. Let me refresh it. Some of the numbers are big here. So, and it populated the rest of the information. So it populated all the enterprise values, all the estimates and actuals. It gives me the multiples, which is the most important thing. I'll just do some sense check to see if the multiples make sense. We've got pretty big difference here. Like Kohl's, I think has the lowest multiple, probably because of online delivery disruption. Costco, on the other hand, still is doing pretty well. And you can kind of correlate the multiple with the growth rate. And again, see if that makes sense. You can see that for Kohl's, the CAGR for revenue is negative. So lowest revenue growth means lowest multiple on EV to EBITDA basis. For Costco, on the other hand, their growth rate is 11%, one of the highest growth rates, and their multiple is the highest. So that's how you kind of interpret the multiples and get comfortable with them. That really completes this exercise of pulling data from FactSet. And if you save it, again, I think it's a very useful tool. You can use it for different companies, different time periods. And because you've done it from scratch, you can also set up your own multiples, your own, things you'd like to use to value companies based on comparable company trading analysis. Thank you, and I will see you in class.